On behalf of the Sustainability Reporting Standard Board, I myself, CA Shweta Goyal, Secretary to the Sustainability Reporting Standard Board of ICI, would like to extend a very warm welcome to all of you today for the 8th session of our webinar series, Demystifying Sustainability Catalyzing Growth. We are conducting every week this webinar on every Thursday from 4 to 6 p.m. We would like to invite you to join every week with us. And today's session is centered around the critical theme of sustainable financial instruments. And we are honored to have with us CA Preeti Savla ji, our chairperson of SRSB, our vice chairman, CA Dr. Sanjeev Singhal ji, our esteemed speaker, Mr. R. Aditya Subramaniam ji, and our moderator for today's session, CA Ankush Dhanuka ji and Yash Hiren Mohta ji. Now let us begin. I would like to invite CA Ankush Dhanuka ji to kindly take this session forward. Over to you, sir.
Good afternoon to everyone, our session chairman, vice chairman, our esteemed speaker, and my fellow host, Yash. So I'll start with giving a brief introduction about CA Preeti Savla ma'am, the chairperson of SRSP. CA Preeti Savla ma'am is a Central Council member and also holds a key roles as a chairperson of Sustainability Reporting Standards Board and Women and Young Members Excellence Committee, vice chairman of the Corporate Law and Governance Committee and Group on Enabling Lifestyle for Environment Life, and is on Board of Discipline and other committees. Internationally, she represented India on the IFRS Foundation's ISSB's Sustainability Standard Advisory Forum and has chaired the SAFA Sustainability Board. In the corporate life, she serves as Public Interest Director in NSC Clearing Corporation and is an independent director and audit committee chair for several leading companies. Her contribution extends to social impact initiative as director of Institute of Social Auditors of India and a governing council body of the Social Stock Exchange BSE. A noted speaker and mentor, she has been instrumental in launching several noteworthy key initiatives in Sustainability Board and Movement Committee of ICAI. Now I would like to pass it on to Yash.
Thank you, Ankush. Our Vice Chairman, Dr. Sanjeev Kumar Singhal, is a Central Council member and a distinguished chartered accountant with 26 years of professional experience, currently serving as a partner at SR Bartley Boy and Company LLP. He is the founder chairman of the Sustainability Reporting Standard Board and currently chairing the Accounting Standard Board and Group of Impact Financing, and also the vice chairman of the Sustainability Reporting Standard Board and Development of International Trade Services and WTO Directorate. He has significant involvement with SEBI and Niti Aayog panels on sustainable development goals and social stock exchange. Internationally, he has chaired the 39th and 40th sessions of UN Trade and Development (ISAR) and participated in various global standard setting committees. He is a prolific speaker and author with over 1,200 lectures delivered worldwide and numerous publications on accounting standards.
Over to you, Ankush, sir, for a brief introduction about the speaker.
Yeah, now I'll give a brief introduction about our esteemed speaker. Mr. R. Is my voice audible?
Yes.
Yeah. Mr. R. Aditya Subramaniam. Mr. R. Aditya Subramaniam is a bachelor in accountancy in finance who, for the first time in Mumbai University, scored 100 on 100 in cost accountancy. He went on to complete company secretaryship course, LLB, MCOM, Business Policy and Governance, and was a topper in SEBI and ISM certifications in security law course. He was among the top 5 in his company to be chosen for completing the Credential of Readiness program for HBX, which is Harvard University. He has also pursued the postgraduate diploma in intellectual property rights from Mumbai University. He is currently employed with Geo Financial Services. Now I would like to pass it on to him. Thank you.
Welcome you, sir. We welcome you, and now you can take the session forward.
Great. Thank you, CA Shweta. Thank you, CA Ankush, CA Yash. And it is indeed a privilege for me to participate in this webinar and address so many of you chartered accountants. Incidentally, over and above what has been introduced by CA Ankush, I'm also a member of the sustainability, instead of ISAI, right? So, Social Auditors of India, and I am also a social impact assessor, certified one. So, I thought I'd mention it so that you are able to appreciate what I bring to the table and what will be discussed over the next 2 hours. So, what I'll do now is I'll share my screen and we'll run through the presentation, which is on a very interesting topic. And the more I dive into the contours of this subject, the more do I realize that how little I know about it. So I'll just do it in a slide share mode. Yes, I'm sure the screen is visible to all of you participants. The topic for our discussion over the next 2 hours is going to be largely on sustainable finance instruments. What we'll do over these 2 hours, and as I said, it's a discussion, so I would request the moderators to keep noting the questions that the participants may have as and when the session is in progress. And I leave it to the moderators as to whether they would want to interject me when they receive a question pertaining to a particular slide or a segment, or if they would want to pose those questions at the end of the presentation. Having said that, these are the topics that we will cover today. A background on sustainable finance instruments, further introduction, there's going to be a deep dive, what is the issuance process, conclusion, and then further Q&A, if any. This is a disclaimer. The views expressed are personal in nature and not to be construed to be that of the employer or the organizations that I am or have been associated with. Knowledge is an ocean, and as I mentioned at the outset, I'm only an amateur swimmer. So let us learn together such that we both enhance our knowledge on the subject. As is mentioned in the third bullet point, knowledge only increases manifold when shared. So please be expressive during the presentation and facilitate this collective learning experience which have been posed before us or offered to us by ICAI. Now we go to the first segment, which is the background. We have kept a benchmark of 31st December 2023 because the details for 2024 are not out as yet by various research bodies, including the Climate Bonds Initiative, including IFC. So the latest reference material that we have in the public domain is that of 31st December 2023, and this is the reference date that you will be encountering in the subsequent slides and throughout this session. So by December 31st, 2023, climate bonds had recorded an aligned GSS. When we say GSS, this is again another term which will be used increasingly through this presentation. GSS means green, social, and sustainability bonds, plus sustainability linked bonds, and it could be of various colors, which you have heard, blue bonds, yellow bonds, orange bonds, green bonds, which is more popular, etc. So, it had a cumulative volume of 4.4 trillion. So as of the same date, which is 31st December 2023, the total bond market, including the regular ones, which is not the GSS plus or labeled ones, is about 140 trillion, of which 4.4 trillion USD is what is ascribed to the GSS plus bonds. So in 2023, climate bonds, and this we are using it interchangeably just for the ease of reference and being mentioned at the meeting time after time. So we just call it as sustainable bonds or climate bonds, whereas as we progress through this session, we will see as to what is the definition or what is the construct of each of these instruments, right? So these bonds capture an aligned volume of about 870 billion, which is 3% more than the 2022 figure, which was 843 billion. Now, if we see the green bonds, it has increased by 68%. And it reflected a 15% year-on-year increase as it when compared with 2022. We saw a 15% growth as regards the green bonds are concerned. And there has been a decline as regards social and sustainability linked bonds. Social bonds has been a decline by 7% and sustainability linked bonds by 30%. So somewhere we have seen a meteoric rise, and in some places we have seen a plunge or a depth. So this is the environment that we were in. Now, if we see region-wise, right? How has Africa, see climate, greenhouse gas emission, scope 1, 2, 3, sustainability, all of these things are something which is not local in the sense. This is something which is being pursued at a global level, right, from United Nations, right? So I just thought let us give a perspective as to over the past very many years, how has the bond performance, issuance, etc., been region-wise? So if we can see the rise in the Asia Pacific region, that from 1.6 billion in 2014 to 190.2 billion. So and if you see Europe, because they keep amending certain of their or they bring in new standards, new guidelines. So the reception of even the investors is so encouraging out there that the issuance is also on the higher side. Latin America, has seen a decrease, but then some countries, especially Panama, they are doing very well now. At least the 2024 disclosures, what are there available on public domain, either on IFC's website or CPI's website, is showing encouraging developments, wherein probably we could see in the next couple of years to come a bounce back in the Latin American markets as regards labeled bonds are concerned. Now, this is exactly a tabular representation of how the bonds have performed. And it is also from an emerging market, a developed market, supranational basis, which is the table on the right. So you can see the developed market has a lion's share. And the reason is because of the maturity of all the participants in bond issuance. It is the issuer, the intermediaries, the investors. So because of the level of understanding of these labeled bonds and the maturity among the intermediaries, there is a lion's share, as I mentioned earlier, which is attributed to developed nations. Emerging markets, as you can see, has been constantly on the rise, while there was a dip during COVID, but then it has been on a rise ever since, and which is why it gives us the scope as to what is the potential that we have. And if we compare 2022 with 2023, 57% of the issuance has come from the corporate sector. Now, the statistics or the data which you see on screen is largely from the sector which is the issuer, right? So you have development banks, you have corporates which are financial corporates, non-financial corporates, government-backed entities or PSUs, then local government which are municipal bonds, etc. And then you have the sovereign country-level bonds. Now, if we see here in this, there has been a constant rise in the issuance from financial corporates, that is the banking sector, insurance sector, lending sector, etc., and non-financial corporates also. And we will see a few examples on the Indian context in the slides to come. And the non-financial corporate issuers contributed 29%. Okay, so the overall contribution by the corporate sector is 57%, and the non-financial corporate is 29%. And the financial corporates emerged to be the second largest issuer type with 28% share in the aligned green borrowings. The United Nations estimates the climate and development finance gap to be about 5 to 7 trillion per year. Now, this is what I was mentioning 2 slides ago, that there is tremendous opportunity, especially in the developing nations or the emerging markets, to come up with innovative bonds. And we will see what are the different types of bonds, what are the labels that they bring in, what is the differentiation, etc. But this is just because, being chartered accountants, there is a lot of scope in this field, because specialists or people who understand this domain, at least in India, are fewer than what the market would want. So, which is why there is also a premium. It opens a lot of opportunities for intermediaries, including chartered accountants. So 5 to 7 trillion per year USD is what is envisaged by the United Nations to be the gap. Now, climate finance flows keep rising, okay, but they're nowhere near the limit of 1.5 degrees as far as global warming is concerned. Where is this 1.5 degrees Celsius is coming from is basically the Paris Agreement, which was entered into by close to 200 member nations of the United Nations in the year 2015. Many of us definitely have studied it or would have come of reference to it sometime during our studies or in the academic journey or as part of our professional pursuit. So by 2030, the emissions are targeted to be halved than what was in 2015 when all these signatories to the Paris Agreement arrived at a consensus. And by 2050, it's going to be net neutral. So carbon neutral is what is the essence of the Paris Agreement. So while there has been a lot of funding opportunity and instruments which are in the climate finance domain, United Nations says that it is nowhere close to all the efforts which are required to ensure that the global warming temperature is curtailed at 1.5 degrees Celsius. The green bond market, now this is the background, so the genesis it started in 2007, right? And since then, the sustainable debt market has evolved a lot. And as I mentioned at the outset, it has got various labels: social, sustainability, transition, colored, and so on and so forth. And all of them have contributed in a way to a certain extent, close this gap, right? And sustainable debt market globally, as we had also seen earlier, is about USD 4.5 trillion, and it has been dominated by green bonds. Out of the 4.5 trillion, 2.9 trillion US dollars are from green bonds. The reason is that is the most evolved because it is there since 2007, and the markets are also able to appreciate and understand with great maturity the green bonds and the terms and conditions, basically as to what it signifies. So this is where we are, and in the recent years, both in terms of amount issued and in the number of issuers, the share of other labeled bonds have increased because A, they came into existence. B, after them having come into existence, the level of understanding to appreciate it among the investor base, among the intermediary base has also improved, because of which there has been a higher appetite for the other labeled bonds than green bonds, which are traditional bonds. Now, in this slide, we can see as to how climate finance has flown over time and how it ideally should be, right? And as we can see, the graph goes right up to 2050. And when we see the year 2023, you can see as to what is the gap, right? In the earlier slide, United Nations has remarked that while there has been an increase in green financing, but it is nowhere close to what our targets were. And in the bars which pertain to 2023, as pointed out in red, you can see what is the kind of gap. And once you appreciate the gap, you will also appreciate the opportunity at hand. Now, this is a breakup between various labels. Green, as you can see, initially it's all only green bonds. And over the years, after COVID is when it started picking up. We have sustainability bonds, we have social bonds, sustainability linked bonds, but still the dominance of green bond continues to remain, largely because the understanding for a green bond is the highest. Now let us look at the various sustainable finance instruments, right? So what are sustainable finance instruments? That UN had launched the SDGs, as we know, Sustainable Development Goals, in 2015. And as we all know, there are 17 goals, 169 targets, and 247 indicators. So, countries are having to report on a 5-yearly basis. That is, the signatories to the Paris Agreement are required to report periodically and most significantly on a 5-year basis as to how it has fared in all these goals, in achieving these targets, and the 247 indicators, how each country has fared. So the transition journey towards sustainable development needs to be holistic, obviously, because it cannot be only one side of the stakeholders who is embracing and is supportive of attainment of the sustainable development goals, which basically means all efforts have to be aligned. Now, in the subsequent slide, when we revise as to what these 17 goals are, we would appreciate that all of the efforts which are put in by these stakeholders are somewhere or the other connected to these 17 goals. So that alignment is absolutely necessary. And there exists a great deal of, or a deep link between climate change, nature loss, and social adverse impacts. For example, once the climate turns really, really adverse, suppose say there's a lake which is there, something which is very relatable, right? And because of sand dredging, the water is something which cannot be traversed, right? There are currents which come and then it is inaccessible. Even if it is accessible, the marine life ecosystem has gone haywire. So fisheries are impacted. Traditional livelihoods of the fishermen folk are impacted. And which is why there are adverse social impacts, right? There could be a social unrest, there could be a rise in crime, etc., in a particular area wherein that particular community was at a dominance. And suddenly, for no direct fault of theirs, they would stare at a day when their livelihood opportunity for generations and even by their own training is no longer available. Right, and the challenge is to the entire system. As this one small example, which I mentioned to you, it can be extrapolated to various other areas of profession, right? And the solution must include the entire system in the sense that there should be multiple stakeholders at play. It should be the communities, it should be the corporates, it should be the entire supply chain, it should be government agencies, and so on and so forth. So, as I mentioned, this is just a revision as to what those sustainable development goals, which was proclaimed by the United Nations in 2015, are. There are 17 in number, as we all know, and all of the bond issuance on the sustainability front are linked to these goals, right? No poverty, zero hunger, good health and well-being, quality education, gender equality, clean water and sanitation, affordable and clean energy, decent work and economic growth, industry, innovation and infrastructure, reduced inequalities, sustainable cities and communities, responsible consumption and production, climate action, life below water, life on land, peace, justice, and strong institutions, partnerships for the goals. These are the 17 SDGs which we just went through and revised and refreshed our memories. Many of it, is interlinked. For example, no poverty. If the issue pertaining to poverty is tackled, obviously there may not be any hunger. So, principle 2 or goal 2, which is zero hunger, is also taken care of, right? And then, if not completely, to some extent, it will ensure good health, because if you're having food, if you're no longer, below the poverty line, it ensures that your level of well-being is slightly higher than what it was before. So on and so forth. We can see that many of the goals out of the 17 are interlinked. If we step ahead to tackle some of them, organically, certain other goals will also get tackled. Now, this is just a diagrammatic representation as to various terms which pertain to sustainable finance, right? So basically, sustainable finance can bucket into two parts. One is green finance, and the other is social finance. And there is certain amount of overlap, which also we will see in the slides to come. So in green finance, a major chunk is that of climate finance, right? Because climate, the very nature of the element is such that it is all encompassing. If it is an area which is drought prone, so what are the efforts which are being taken to help the water security in that region? If it is a coastal area and the glaciers are melting, the sea levels are going high, there is a propensity for the coastal areas to go underwater. What are the steps which will be taken to ensure that these negative impacts of nature or climate are abated, right? So climate finance, because of which forms a major part under green finance. And then you have these green bonds and green loans, which are a subset in a way of climate finance. And there is always an overlap, and which is why these boxes also you will see on screen tend to overlap with one or the other. It is just like the earlier slide, what we saw among the 17 SDGs. There is bound to be some overlap. Likewise, here in the realm of sustainable finance, also you have certain overlaps which are happening. It's all a matter of interpretation, but at the end of the day, all paths lead to the 17 SDGs, right? And then you have transition bonds. So we will look at transition bonds also in depth in the coming few slides. Performance-linked bonds, sustainability bonds, and there is a term called sustainability-linked bonds or SLBs, right? So all of these, are used either interchangeably by the common man, but when you bring out an offer document, we need to be very, very correct technically. So this is as regards, the green finance part of sustainable finance. And the other part, which is not as big as you would have seen in the graph which was shown earlier, green finance, green bonds are dominant because that understanding is much, much more. And likewise, if you see here, social finance, it is not as dominant as green finance, but then it includes pandemic bonds, social bonds. We call it pandemic bond because it has come, post-COVID, as you have seen in the earlier slide also. Till COVID, it was largely only green bonds. And after COVID is when, in the graph earlier, you would have seen that there are green shoots, so to say, for the other types of bonds. So, pandemic bonds can be for, meeting certain global health challenges. Social bonds, we will look at it a little later. So all of this is under the realm of sustainable finance. And outside of the realm is something which all of us are aware of, which is, say, the vanilla bonds or the vanilla loans, etc. So this is as regards the overall realm of sustainable finance. As a vector diagram, also we have tried to see, Venn diagram, you can say, we have tried to see where the overlap lies, right? There is a lot of overlap. Somebody who's unmuted himself or herself, unless there's a question, you may go on mute, please. Thank you. So, as you can see, there is a lot of overlap in the types of instruments which are being issued, right? So, under green finance, you have green bonds, blue bonds, biodiversity bonds. Under the social bonds or the social finance aspect, what we have seen in the earlier slide, there are social bonds, there are gender bonds. We will see some of them in detail in subsequent slides. And then I had mentioned in the earlier slide, there's something called as sustainability linked bonds. So basically, in the earlier slide, we had seen performance linked bonds and sustainability bonds. So there is something called as sustainability linked bonds because they are, attributed to certain sustainable performance targets or SPTs, what it is known as. So this is just a Venn diagram of sorts, which I thought I'll share with you, that you're able to appreciate the kind of overlap in all of these concepts. Now again, labeled bonds, we can bifurcate into two parts, right? One, based on use of proceeds, and the other is based on performance. The names are self-explanatory, right? Suppose there is an entity which has raised, say, a labeled bond, and it is saying that the proceeds of these funds, or once you get the allotment done, the proceeds will be used for a particular objective. And then we will see subsequently that objective is to be tracked to closure, sustained, etc. So, say for example, social bonds, right? Social bonds can be to say like women entrepreneurship. So all of the proceeds of the social bonds issued by us will be linked to increasing women entrepreneurship, and you can even get specific, say in the state of Chhattisgarh, right? So there is a use of proceeds. Where will my money as an investor, if I subscribe to this particular bond, be used, right? And then in the subsequent slides, as I said, you will get to see as to how it is monitored. It is not that once you raise funds and then you say that it is going to be used for a particular purpose, that is the be it and end all. No, that is not the case, because there is a lot of transparency involved. There are reporting frameworks which are involved, and there is a constant monitoring by various entities, including that of the investor community. So one among the labeled bonds, one set is that of the use of proceeds-based bonds, and under that broadly it comes to social bonds, green bonds, transition or sustainability bonds. As you would appreciate by now, they're all linked to a particular purpose. The proceeds of the funds raised by issuance of these bonds will be used towards a particular goal or to meet a particular area which currently is deficient from a sustainability perspective. To the right, you will see that the next segment is that of performance-linked bonds. Now, performance-linked bonds means there is a particular parameter, which is being pursued. Okay, and in the offer document, as regards the bond is concerned, itself there will be upfront disclosures. Just like how when someone goes to buy, say, a building or a flat which is under construction by the builder, he says that when the platform or when the foundation is laid, this percentage should be paid to me. When the slab for the 5th floor is laid, this percentage is to be given to me. This is when there is basically a set time frame and a corresponding amount which is to be paid. Likewise, here also while there is no delayed payment, it is all to be subscribed at the time of issuance and before allotment. But there are targets which are there. For example, I will lay the ceiling of the fifth floor by say 2026 March. Right. So likewise, when one entity issues a sustainability linked bond, there are set of sustainability performance targets or sustainable performance targets. So those targets are the ones which are closely monitored. You would have also heard, when we talk about targets in sustainability, you would have also heard of, such and such company has declared that it will be net zero by so and so year, right? That is also a target. Likewise, specific to the bonds, sustainability linked bonds, which has been issued by an entity, there will be a certain set of targets which are disclosed. And then it is benchmarked basis that particular target. So in short, sustainable finance instruments or labeled bonds, as you may say, can be categorized based on two things. One is use of proceeds based on bonds, right? Or bonds which are based on use of proceeds, or you have performance linked bonds. Use of proceeds bonds, basically in the offer document itself, it mentions as to for what purpose is the bond being issued by the entity concerned, and it could be of various types. And as regards performance linked bonds, what is mentioned is a specific set of targets. Now, in the previous slide, we have seen certain phrases like social bonds, green bonds, performance linked bonds, etc. Let us see as to how we could associate those bonds with terms or phrases that either we would have heard or we would find it to be more relatable. See, social bonds would be for affordable housing. When we say affordable housing, it has to be basically largely from a budget perspective, that it should be something wherein the underserved segments of the society are also able to fulfill their dream of home ownership. Right? Affordable housing, the government also has done various schemes, etc. And many of the housing finance companies or financiers in the housing finance domain are also given certain subsidies, etc. by the government. So that is affordable housing for education, for gender equality, for bettering the health infrastructure, skilling or making the youth more employable. These are broadly what we have seen from the bonds which have been issued globally and the information of which is available in public domain. Green bonds, various colors are there, blue bonds, climate bonds, green bonds. There are also these yellow bonds, a concept paper was also talked about, wherein it is for solar related financing. So blue bonds, basically for cleaning up the ocean, the river, marine ecosystem, etc. Climate would be more, large scale in the sense that if there is a lot of emission which is coming from a particular sector, whether that sector can do better than what it has been doing in the past as far as emission is concerned, wherein at a climate level, the global temperature, as we had seen in a few slides earlier, is below what has been agreed by all the member nations or signatories to the Paris Agreement to be lower than 1.5 degrees centigrade. Renewable energy, yes, it is self-explanatory. Environmental bonds are, again, it can be for afforestation, it can be for very many things. So that is green bonds for you, just a few examples. And performance-linked bonds, which we saw to be the second category, it could be for general purpose, right? But then what happens is, while it could be for some general purpose, there are some targets which are to be achieved. Now, the green bonds, social bonds, or the label bonds, which are use of proceeds based, it cannot be general purpose. they have to be utilized for a particular area which is mentioned in the offer document. Now, performance-linked bonds, or even say you can say sustainability-linked bonds. One unique feature is that penalties and rewards, right? If they are able to achieve it on time or ahead of time, there are some rewards which are given to the investors or to the entity concerned. And if it is not able to meet the target which has been disclosed in the offer document, then certain penalties are inflicted. Penalties could be, say, a higher rate of interest on that instrument, which is a particular kind of bond. So, the penalties and rewards concept come because you're able to measure the achievement of the stated targets. You have set a target at the time of issuance, and if you end up not achieving it, you end up getting penalized. If you achieve it, you end up getting rewarded, and so on and so forth. Right? Rewards can be, say, greater access to finance amongst the said investor pool. It can be, say, a marginal reduction in the premium, etc. And it is, as I said, linked to meeting or not meeting a certain set number of rules. And obviously, it is time bound. You cannot just mention that these are my goals and then you pursue it for infinity. That cannot happen. Each goal should be measurable. You know how we know about the SMART goal setting methodology, SMART. Likewise, each goal should be measurable. It should be specific. And it should be also time bound. So that is as regards performance-linked bonds. As regards transition bonds. Now, what is this transition? We will see subsequently. Transition bonds are basically not completely in the green sector. Say, for example, it can be even the steel manufacturing sector, which is heavy into emissions, right? So, but then they can always take small steps, some process here and there, while inherently it may not be able to convert itself. While there is a concept called green steel, which is being pursued. The government of India also has constituted a high-powered committee to evaluate how steel is being manufactured or produced in India. And so green steel is something which everyone is curious about, right? So steel, for example, cannot come directly under an area which is linked to say green activities directly, right? So what happens is they are going to take baby steps. That is a transition. They are making an effort to transition from conventional and not so eco-friendly ways to eco-friendly ways. Blue transition can be because if they're trying to set up an effluent treatment plant, or if there is an effluent treatment plant, if the infrastructure there is sought to be enhanced, right? And so on and so forth. So this is largely as regards transition bonds are concerned. Then we come to sustainability bonds. Now, sustainability bonds come, if you remember the Venn diagram, which was there a couple of slides earlier, there is a lot of overlap, right, between the labeled ones, between the use of proceed ones. So, ESG in general, when a positive impact is to be created, sustainability awareness oriented, is very, very broad. But then the goals are set. Why a particular instrument is being issued within the realm of sustainability, such that it is a sustainability bond, is also very certain and clearly mentioned in the offer document. Now let's look at the instruments, right? We're now going to go into a deeper engagement as regards what these instruments are. Right. So if you've seen this, I have just tried to capture something from what is again available in the Climate Bonds Initiative's website. They have tried to bring in various, terminologies under 4 buckets of green, social, sustainability, and sustainability linked. Right? When we say green, as we had seen earlier, it is dedicated for environmental benefits. When we see social, it is dedicated towards certain social benefits or certain social goals one has to achieve. When we see sustainability, well, it is a mix, as you had seen, that is the point of intersection between the social and the green bonds. So combined goals, goals which can be either having a green footprint, which also has a social footprint, is what is generally termed as sustainability bonds. And then, as we had seen on the extreme right-hand side, in the earlier slide as well, and which is also the extreme right column here, which is SLBs or sustainability linked bonds. Okay. Now here, as we had seen earlier, what is mentioned in the website also is coupon step up or step down linked to entity level sustainable performance targets. So coupon up and down means, suppose we saw the earlier slide, penalties or rewards, right? The entity is penalized by having a higher coupon, which is a coupon step up. If it was, say, 8.2%, it probably will become 8.23% or 8.25%, right? And step down is, suppose if you're doing well, you're meeting the targets on time, or your efforts are such that the targets are being met with ahead of time, then the investors could, basis whatever is the terms and conditions in the offer document, the investors could reward the issuer with a step down as regards the coupon rate is concerned. So from 8.2, it can be 8.15, 8.18, depending upon what is the kind of achievement and what is the matrix which is being listed out in the offer document. Right? And within green, as you had seen earlier, there are a few examples. Blue bond, which is pertaining to water-related goals. Climate bonds, as we had seen earlier. Green bonds, renewable energy. All of this we spoke. Solar, self-explanatory. Environment, biodiversity, and then you have something called as space, which is property-assessed clean energy. Right, depending upon what is the property. If it is a particular machinery in an industrial setup, which is heavily energy intensive and non-renewable sources based energy intensive, then for that particular property, what is the effort being done to make it rely on clean energy or reduce the emissions from its functioning, etc. So this is something which we have not seen in the earlier slide. Sustainability, self-development goals or SDG green, climate resilience, impact-related bonds, transition bonds we had seen. Now, in the social bonds, affordable housing, education is what we have seen. Of course, this is a global one, so they have mentioned as Afro-descendant, which basically means if there is any particular community set for which bonds are sought to be issued, then that is also coming under basically social bonds. Health and healthcare, SDG, housing-based ones, town revitalization, youth and employment-related. Silver means, for senior citizens. Diversity, we had seen earlier, diversity, equity, and inclusion. Migrants, especially in Europe, where you had seen the level of bond issuance was the highest. So they also have certain countries wherein migrant welfare-related bonds are issued. And then you have, for the indigenous people of that country, if, they are, let's say, for example, the Aborigines in, say, Australia and New Zealand, the Red Indians of North America, for the indigenous people or the original inhabitants of a particular country or continent, if there are some bonds which are there for their welfare, then that is also coming under social bonds. Under sustainability bonds, we have, as we have seen earlier in the earlier slide, ESG, green innovation, positive impact, sustainability awareness, socially responsible investment, LGBTQ+, impact, gender equality. These are the ones I think which should give you an idea as these instruments or these types of bonds are an overlap between green bonds and social bonds. And finally, we come to the performance-linked instruments, what we had seen a couple of slides ago, which also includes these SLBs, or which are sustainability-linked bonds. Right, so we have ES linked to ESG, linked to certain parameters under sustainability, say linked to certain goals of UN SDG, certain impact if it is to be achieved. So it is linked to an impact which is being achieved. So as you would appreciate by now that sustainability linked bonds definitely have certain KPIs or measurable parameters or targets, and they are to be monitored at a periodicity which is mentioned in the offer document, and there are rewards or penalties based on how that particular issuer has functioned. Now, if we look at green bonds, right? Green bonds are, as you appreciate by now, use of proceeds bonds, means it is based on where the money of the investor is to be deployed, right? And they enable capital raising and investment for new and existing projects with environmental benefits. So this is what we have seen in the initial slide where we spoke about a background as to sustainable finance instruments. This is the most popular one. In fact, till COVID, probably this was the only instrument which largely was issued globally. And this is also the most understood, at least among the intermediaries, the investor base, and the issuer base. And as is mentioned here, it is also use of proceeds based. And just for reference, I have mentioned some of the sectors wherein green bonds have been issued for, like energy, transportation, water, land, resources, industry, waste, clean technology, right, and buildings. So, green buildings, etc., and making it more accessible. So many things are there which are linked to buildings. So this is basically what green bonds are, which is still a dominant instrument in the labeled bond issuance space globally. Let us look at one example, right, in India, and whichever example which I give, it will only be Indian specific, right? While these are all a global phenomena, it is easier for us to appreciate and understand. So we have a prominent example of green bond issuance by Indian Railway Finance Corporation, which is IRFC, and the finance, which is basically the financing arm for Indian Railways. And when you say financing arm for Indian Railways, what is it used for? Basically, it is used to build railway infrastructure, right? To go to areas where railways had not penetrated. We may be a little wonderstruck as to, is there even some place wherein there is no railway connectivity? Yes, there are still many places which are not connected by the railways ecosystem, and which increasingly is being pursued by the government to ensure that the railway reach is increasing, and where, say for example, in October, November 2023, I was in the second or the third train from the capital of Tripura, which is Agartala in the northeast, to Manipur, a place called Khongsang. Right? So there was no train, there was no railway ecosystem. In fact, the the President of India had come to inaugurate this railway line and the train. Okay, that was a Jan Shatabdi Express, and beautiful. It had a vista dome. The last bogie is completely glass on 3 sides. Right? The ceiling is glass. On either side it is glass. The chairs, if you would have traveled through some of these vista domes, which are also there in the Mumbai Ratnagiri belt and which goes to Goa. It is also in Andhra Pradesh from Vizag to the Araku Valley, etc. So for the first time is where beyond Jiribam, which is a place where trains used to halt, the capital of Manipur, and this I'm talking about even before the social unrest which was there in Manipur. It started in May, I think May 3rd or 4th, 2023, and this I'm talking about, say, 2022 October, November. So even before the social unrest came in, there was no railway connectivity in that region. So while we may wonder as to, people, most of us who are lucky enough to have wonderful modes of communication, but it is important for us to also appreciate that there is a lot more to be done, which the government is pursuing. So in these areas only, innovative ways of financing, as you have seen in the second or the third slide, plain vanilla bonds, plain vanilla loans are anyways there. But then there are also these innovative ways to raise funds, right? The investor community is very, very excited about it. So many of the investors, even in the unlisted domain, in startups, in private equity, right? Those players are very, very excited about investing, and we will see in some of the subsequent slides, are interested in investing in entities which are sensitive to ESG. So IRFC had come up with this green bond for 500 million US dollars. The tenor is basically for about 10 years, from 2022 to 2032. And what is the purpose? Because it is user proceeds based, right? As you would appreciate by now. So what is the purpose for IRFC to raise this 500 million USD? Basically, freight railway lines and public transport. So you would have also heard about how the railway tracks or the railway line for the passenger trains and the goods train are being de-linked. There's a separate line for commodity or freight transportation, and there is a separate track which is there for passenger trains. Unlike the days of the past, wherein you would see goods also go, many of them go beside passenger trains. So now efforts are being made to have dedicated freight corridors or freight railway lines. So this particular bond, which is still being traded because the tenor is till 2032, was raised by IRFC. And who's the one who, so there has to be one independent entity, right, which says that whatever is the money which you said will be utilized for achieving a particular goal, is towards which the money of the investors has been deployed. So in this case, there is this entity called Emergent Ventures, which has done or which continues to do the external review as regards the use of proceeds are concerned. And as I had mentioned earlier, and as we will see in the subsequent slides, reporting is to be done periodically by the issuer, and the reporting is basis whatever is the review undertaken by the external reviewer. Now, if you see green bonds at the end of 2023, which I mentioned to you to be the base year till now, because global figures for 2024 are still being calculated. Because when we say 2024, it means the calendar year 2024, not FY24 as we know of, as in 31st March 2024. The calendar year is what is used globally, and so basically till 31st December 24. So the calculation is on, the figures are not yet out in public domain. So I reiterate that the base benchmarking that we'll be doing is that of 2023. So as of 2023, we can see that the size for the green bond market is 2.8 trillion. How many countries have issued it? 96 countries. And out of how many, how many currency? Largely USD and euros. These are the most popular ones, which is why out of 96 countries, you have 53 currencies, right? So there have been a few countries which have, or more countries which have issued in denominations or in the currency of USD or euro. This is as regards green bonds is concerned. So you can see in the previous slide we had seen about 4.5 trillion USD is what is the size of the labeled bonds out of approximately 140 trillion of the entire bond market. So within that 4.4, 4.5, you have close to 3 trillion, which is 2.8 trillion, which is taken care of only by green bonds. Now we come to social bonds, right? The social bonds are again use of proceeds, as you know by now. And so basically, I'm revising use of proceeds and performance linked. Right? There are certain targets. So in this case, it is use of proceeds. Where are you deploying the investors' money? So social bonds are also use of proceeds bonds that raise funds for new and existing projects with identified positive social outcome, which is why in the offer document, one has to upfront mention as to the money which is being raised through these social bonds are to achieve what purpose, what social outcome, what goal, right? So this is basically a very loose or a broad definition of social bonds for us to understand. Now, what are the areas where social bonds have been issued, right? So one is affordable basic infrastructure. When you say basic infrastructure, say bringing in water connectivity, I'm sure all of us appreciate that there is a lot which is being done and which needs to be done as far as bringing potable water or water connectivity to the doorstep of the citizens are concerned. The reality is not what we see only in the cities, right? And there are so many reports, newspaper articles, etc., which you would be noticing, seeing, which demonstrate that there's a lot to be achieved as far as water-related infrastructure is concerned. The next is essential services, which also includes healthcare, affordable housing we discussed earlier. Now, social bond for affordable housing. Why? Because it can also be say for accessible homes, right? It can be a community which is being supported, who largely come from the differently abled segments of the society. Right? The houses will have ramps, it will have certain types of bathrooms, etc. So if there is a builder who is trying to come up with, say, a township for people with, certain ability challenges, physical ability challenges, then that can also be a social bond under the affordable, housing segment. So the use of proceeds will be towards what? It will be towards affordable housing. And is in this example, affordable housing for whom? For that segment of the society which are differently able, right? Then the next is employment generation, program to alleviate socio-economic crisis. It can be skill development. It can be finishing school, because largely you'll appreciate that there are a lot of reports globally within India, research papers published wherein it is observed that increasingly there are a lot of youth who are graduating, who have the graduation certificate or the mark sheet or the convocation certificate with them, but they are not employable immediately, right? So there is this gap between industry and academia, and which can be plugged by bringing about certain, employment generation related social bonds. Right. The next is food security and sustainable food systems. Right. So supply chain as regards. So if it is afforestation, if it is say pertaining to a particular high yielding variety of crop to be popularized, etc., it can be coming under the realm of green bonds. Social bonds can also mean the entire infrastructure, which is their supply chain. It can be even awareness regarding a certain crop or cultivation practice. So the proceeds of that particular issue will be deployed or used for those areas. Lastly, socio-economic advancement and employment. Again, when you say socio-economic advancement, and when you say and employment, it indicates that it is not only through employment what is the purpose for advancement is concerned. Purpose for advancement can also be, say, by making efforts towards alcohol or tobacco de-addiction. Day in, day out, we hear, especially in the rural areas, unfortunate deaths owing to consumption of spurious liquor, etc. Recently we saw in Punjab, some time ago we saw in Bihar. So when you say socio-economic development and employment and empowerment, basically it means that you cultivate certain habits in a manner that the money which is saved out of, say, not buying alcohol or tobacco is deployed smartly for some other investment or some other purchase, etc. So these are some examples of social bonds which I thought I mentioned here. And one specific example or a use case is that of Indiabulls Housing Finance Limited. What Indiabulls has done, basically the primary businesses are housing finance, consumer finance, real estate, etc. Right? And what was the size of the social bond issuance by Indiabulls Housing Finance Limited? It was about 350 million. What is the tenure? It is still underway. It is from April 3rd, 2024 to July 3rd, 2027. Right? And what will be it used for? So use of proceeds. What are the proceeds from the investors from the sale of these social bonds to be deployed? Where will it be deployed? By Indiabulls Housing Finance. It is towards green buildings, to generate access to finance to people probably who are not the traditional customers for banks, etc. So people from, say, the unorganized sector who may not have the payslip, etc. for credit appraisal. Right? For credit appraisal, certain amount of documents are to be submitted, ITR, payslips, etc., etc. So probably since they will be selling affordable houses, to also see how they can be granted access to finance. And then socio-economic advancements and empowerment. So these are the areas which were cited by Indiabulls Housing Finance Limited in its offer document as to the deployment of the funds towards all the proceeds, or how the proceeds will be used. And in this case, the external review is being undertaken by S&P Global. So this is one example of social bonds from an India context. I'm sure not many of us would have tracked, right? We have two Indian examples of bond issuance. And as you can see, both of them are pretty recent. One is just last year, and the other also was from the same time frame. That is from 2022 to 2032. This is 24 to 27. After this session, probably in case the curiosity bug bites you and you feel interested in observing keenly what are the developments in the labeled bond space, I think these things should catch your eye whenever you go through the news items, right? And mentally you should be able to bucketize as to whether it is use of proceeds based bond or whether it is performance target based bonds, etc., etc. So now, if we see from a global perspective, by the end of 2023, the size of the social bonds market was about 821 billion. In the earlier case, green bonds, we saw it was about 2.8 trillion, right? And there were 49 countries which had issued social bonds, and the denomination in which they were issued or the currencies they were issued is as many countries which issued, which is 49 countries issued in their respective currencies. And hence the number of currencies in which social bonds were issued is also 49. Now let's go to sustainability bonds, right? And here again, I have tried to represent through a Venn diagram wherein this intersection between green bonds and social bonds are brought in to your notice and specific attention. These are the sustainability bonds, which has got some amount of elements which are otherwise attributed to social bonds, and some elements which are otherwise attributed to green bonds. So basically, sustainability bonds are use of proceeds bonds, where the proceeds will be exclusively applied to finance or refinance a combination of both green and social projects. So by now, we should be in a position to appreciate as to what sustainability bonds are. So suppose you read an article which talks about an entity issuing sustainability bonds, or if you come across, say, an offer document by an entity which is proposing to issue sustainability bonds, you should be in a position to appreciate that its goals or the proceeds will be utilized for a mix of both social indicators and green indicators. We'll go to some examples. One example is that of HDFC Bank Limited. So, that would have raised an eyebrow amongst all of you, because, probably it would have gotten completely unnoticed, right? So HDFC Bank Limited has also issued sustainability bonds, and it is still in force. As the previous cases also, this was fairly recently issued in February 2024, and it will go on for a period of 3 years plus. Which is still February 2027, right? And for what has this sustainability bond been issued by HDFC Bank? It has been used for energy efficiency, pollution prevention and control, sustainable water and wastewater management, access to electricity, and WASH projects. So WASH project means water, sanitation, and hygiene. So this is acronym which is used in the ESG space, wherein WASH projects tackle challenges pertaining to water, sanitation, and hygiene. So these are the various areas wherein HDFC Bank had mentioned in its offer document for utilization of the proceeds or the subscription amount by the investor. And who is the external reviewer for this sustainability bond issued by HDFC Bank? It is basically Sustainalytics. Another example is that of Axis Bank. Now, eyebrows would have raised again, saying that there are multiple examples or cases of sustainability bonds which have been issued in India, and probably it would not have been even noticed by us. Right? So here, the amount is fairly substantial. It is USD 600 million, and it's a perpetual bond. So the chartered accountants were aware what a perpetual bond is. So in the earlier instances, we have seen a tenure of 10 years, 3 years, etc. In this case, it's a perpetual bond. It was issued in 2021. And what is the proceed to be used for? It is to be used for renewable energy, waste management, clean transportation, green buildings, sustainable agriculture, and education. So these are the areas which were listed in the offer document by Axis Bank Limited. The quantum is much higher. If you see the earlier one, it was only about 300 million as regards HDFC Bank is concerned. But if you see Axis Bank's example, it is 600 million. And this is what it is being used for, the areas. And now, if we see some, and the external review is being done by Sustainalytics, and constantly they will be in a position to receive data from Axis Bank, review them, and come up with their own report, right? And which is shared in public domain, especially for the investors. Axis Bank, I think when I had seen the last time, I think the 2023 report, it ran about 6 pages and very much in detail as to where the proceeds were utilized and what has been the impact and so on and so forth. I think it should be still available in the public domain. If it interests you, please go through these reports, which talk about how a particular issuer has performed as regards the bonds are concerned, or the objectives to have been achieved through the bonds are concerned. From a global perspective, if we go to see, by the end of 2023, the size of sustainability bonds was to the tune of 768 billion US dollars. And the number of countries which had issued sustainability bonds are higher than that of social bonds. There we had seen 43 countries, whereas here it is 69 countries. And the number of currencies in which they were issued is 43. So there could be more countries which probably would have issued in dollar and euro denomination. The next type of bonds. So thus far, what we have seen are the green bonds, the social bonds, the sustainability bonds, right? Transition bond in the first slide of this segment, I had mentioned that they are not directly attributable to, say, environmental causes or to champion environmental causes, but indirectly they lead to the same path, right? So transition bonds are use of proceeds bonds that finance activities that are not low or zero emission, that is not green. Upfront it is mentioned, right? The definition itself as to what are the transition bonds, such that the investors don't end up with some kind of an expectation, right? But they have a short or long-term role to play in decarbonizing an activity or supporting an issuer in its transition to the Paris Agreement alignment. So basically, the example which I gave you, say in the steel sector, there is one machinery which is causing a lot of emission and which is heavily dependent on power and non-renewable sources of power, etc. And then the steel company concerned comes up with, say, a transition bond to say that, hey, my entire process cannot be termed as green, or it cannot be suddenly be zero emission or low emission, but I am taking certain steps, through issuance of these bonds. I will be able to modernize my technology or the equipment which is there. Slowly, I'll be able to replace them, etc., etc. So, which is why it is called as a transition bond. And then, when you say in alignment with the Paris Agreement, it means, as I mentioned earlier, halving the emission from whatever other standards in 2015 to by 2030, and to be net zero by 2050, and so on and so forth. The rise in temperature should be kept under 1.5 degrees Celsius, etc. So all of this, suppose the example which I gave you, will lead definitely to that aspect, right? The machine being replaced or the new technology coming in as one process out of the entire set of processes in that particular factory or industry, it will in a small way contribute towards whatever is the objectives of the Paris Agreement. So in a nutshell, if you have to see what are the key characteristics or the essential features of a transition bond, again, these are use of proceeds instrument. They are ring fencing of funds to predefined assets. Means this is the asset, this is the machinery, this is the factory. Within that, this particular area is where I am going to utilize. So, which is why I've written it is similar to green bonds, because even in green bonds you state an objective. Here, the entire objective is not to be zero emission, etc., etc. But within that also there is an objective that from amongst the entire process, one process is what I'm aiming to make it, less, emitting, right? And there is a general lack of market standards and definition. As regards transition bond is concerned, still that kind of a maturity is yet to be seen in the market. There are, across geographies, there are different standards, there are different definitions, etc. So a certain amount of maturity is still to come in as regards transition bonds are concerned. Regarding the earlier three bonds, we can see there is some amount of maturity which has been appreciated by all the players, be it the issuers, be it the intermediaries, be it the investors, right? But transition bonds, at least from what my assessment is, there is a lot of scope for coming into a consensus as to understanding regarding definitions, regarding standards, etc. Some of the sectors, wherein there is a lot of scope for transition bonds to be issued is like, say, the cement sector, the chemical sector, the steel sector, largely which are, energy intensive and, which make a lot of emissions as part of its manufacturing process, is where we can see a lot of scope for, transition bonds. One example is that of Bank of China. Bank of China Limited. They issued in euro denominations, and it was to the tune of 300 million. It's still in progress. It was also fairly recent, that is by the end of 2023 only, and it is to go till October 2026. Now, what is it to be used for? It is to be used for production and recycling of steel using furnace heating with fossil gas and CCUS. CCUS is basically a technology which is to keep under check the emissions, right? So this is going to be only a part of the entire steel production or steel manufacturing process. So this is what was issued by Bank of China Limited, and its external review is being done by EY, Ernst & Young. So we have broadly seen as to what are the types of labeled bonds, these categories of it, and we have seen the different labels which can be under a particular category, and we have seen as to how the market size has been over the years, how the market size was towards the end of 2023, how particular geographies have been responding to bond issuance, what is the appetite in different geographies, and we had seen that there's a huge appetite in the Asia Pacific region. We had also seen which are the sectors, whether it is the sovereign one, whether it is the finance corporate, non-finance corporate, etc., or development banks. And in that, we had seen that finance and non-finance corporate about 57% of the subscriber base or the investor base, right? Or rather the issuer base. So having come to an understanding as regards these concepts, now let us also see what is the issuance process, right? It is not only enough for us to have the concepts in mind as to what are labeled bonds, etc. It is also important for us to understand as to how it is to be taken to the market, right? Which is what we will see in the subsequent slides. I'll just try to list down what are the steps, and it is not out of any textbook also. Largely, see, one has to engage with the stakeholders to identify. Suppose the Bank of China came, HDFC Bank came, so many banks we have seen as part of example for social bond, transition bond, etc. IRFC we saw for green bond. So we have to engage, or when we say we, means the issuer has to engage with the stakeholders. What does he need to engage with the stakeholders for? He needs to engage.
So sorry to interrupt.
Yes.
Just wanted to ask how many slides are left.
Okay.
Actually, our chairperson wants to join. That's why.
Okay. See, I have time till 6 p.m. So I had kept say a 15-minute buffer for Q&A, if any. If need be, I can talk up to 6 p.m. If the chairperson wants to attend and offer her welcome remarks or her thoughts on the subject, she may do so now. I don't have any problem.
Okay, sir.
In the end, she will join.
So in the end, she will join then.
Fine.
Before the
No
question
problem.
answer round.
No, pardon me?
Before the question answer round, we can ask her to join.
Definitely. I leave it to your discretion. You could stop me whenever.
Sure, sir.
Yeah. So now, I come back to the slide. We engage with the stakeholders for what purpose? We engage with the stakeholders to identify which are the eligible projects or assets for which we will be raising a bond. So use of proceeds as a term that we have been seeing. What would it be used for, right? So what are those projects? What are those assets? Asset means we have seen the transition bond, right? This particular process or this particular machinery, right? So you identify that. And then you develop a thematic framework. Mere identification of a project or mere identification of an asset will not suffice, right? So there has to be a framework under which the entire bond issuance, the monitoring, the attractiveness from an investor perspective, etc., will be presented. Right? There has to be a framework which needs to be worked upon. So that needs to be developed after we have engaged with the stakeholders, after we have identified which are those eligible projects or assets, right? And then what happens is we have to take the help of, say, external experts to, ascertain whether what we have developed as a framework, as a thematic framework, falls within the acceptable framework or realms pertaining to that particular bond issuance. For example, if an entity is to come out with a green bond issuance, and that entity doesn't have paragraphs, or the offer document doesn't mention where the proceeds are to be used, rather it gives us targets, etc., which is largely the performance linked bonds or the feature of sustainability linked bond SLP's framework, then the external reviewer will say, hey, the nature of the bond that you're trying to issue and what is mentioned in the offer document, that is different. We need to align it as per the global framework. So this is where the independent external review comes to help before it is offered to the public. And then what happens is, once the inputs of the external reviewing agency are taken, we disclose the terms and conditions of the offer in a public offering. So the offer document is made public after all the regulatory approvals, of course. And then once it is made public, then you open the issue. So GSS, green, social, sustainable, plus labeled bonds, you issue them, and then you allocate. So once it is issued, it is subscribed, we do the allotment. After that is done, once the funds have been utilized or once the funds have been received by us, we have to allocate them for the identified purpose, project, asset, etc. So that needs to be done. And again, as you had seen in the earlier slides, right, wherever a bond issuance has happened, there is an external review. The external reviewers report is made public, right? So post issuance, there is an external review which is being undertaken by an independent agency or body, which largely is also indicated or named in the offer document, and then they verify the KPIs, key performance indicators. Year on year, what was said to have been achieved by the issuer, has it been achieved or not achieved, etc. And then there is this continuous monitoring, reporting, which is there, and transparency. Suppose the investors ask some questions, transparently we need to engage with them, part with certain details which they may be asking. So this is a continuous process. We saw the Bank of China's transition bond is for 10 years, right? And we have also seen IRFC's bond is for 10 years, 22 to 32. So there are 3-year bonds as regards social bonds are concerned, sustainability linked bonds are concerned, etc. So basically, these are, at least as per my understanding and knowledge, to be the various steps of issuance or the life cycle, you can say, right from the genesis of the thought that there needs to be an issuance of a bond for this particular area, this particular purpose. Right from there till the continuous engagement with the intermediaries concerned or with the investors concerned. Right now, investor reach. How do we reach out to the investors? What should the marketing material or the investor pitching deck contain? It should obviously contain the proposed terms of the bond. What is the framework? In the earlier slide, we had seen that the framework is validated by an external expert, an independent external expert. So, what is the bond framework? How often and by whom will an external review be done? What is the overall? Why suddenly an HDFC Bank or a Bank of China is coming out, for example, with this issuance, right? So, what is the overall ESG strategy of the issuer concerned? Then the transaction details, like say, where will the funds be deployed? Will it be held in a separate escrow account from where the deployment to various projects happen, or if there is, say, some amount which is remaining yet to be deployed, what are the instruments in which that amount, undeployed amount, be invested in? Okay, so these things are pertaining to the transaction. And lastly, overall credit review of the issuer. Like, this is definitely to be issued by a financially sound entity. So, how the performance from a finance perspective or from a balance sheet perspective is. So these are some ingredients which we have seen largely to be in the investor pitching deck or in the marketing material, as far as any labeled bond is concerned. The offer document, which is submitted to the regulator, and then finally, which is what opens the issue, is much more exhaustive. So, key elements from that is what is largely what we have seen as part of the investor deck or the marketing material. To reach out to the kind of investors, one needs to do road shows. When we say road show, means you invite the potential investors from within the target group into a place, and then you make a presentation. They interact with you. Whatever are the questions which are concerned, they're able to answer that, right? And then bond issuance can be subscribed by global investors. As we have seen, there is a maturity or an understanding as regards labeled or bond issuance slightly at a higher level than what is currently domestic markets. So in case you would want to engage with global investors, you organize calls with them. It could be for certain investors who focus only on ESG-based investment. It could be for general investors as well. So this is these are the mechanisms which are to be adopted as regards reaching out to the investors concerned. Right? Now we come to pricing methodology, because not
Sir,
only
sorry to interrupt you in between. As our chairperson is stuck in a meeting, now she is able to join. Can we just give a brief introduction to ma'am? We would like to welcome.
Wait. Aditya, how much presentation is still there?
I'll take 10 more minutes.
So you can.
Yeah.
So let him
Sure.
continue the presentation. Then I can actually come. I am there. I'm listening. So this is a very interesting topic. So you please continue, and then I will also share some of the points. Okay. So please continue. Yeah.
Thank you. Obliged. Thank you. So now I come to the pricing methodology, right? So let us see the journey of the presentation. We have understood the background. We have seen what is the appetite for all of this in the global market, in India. We have seen various examples. We have seen what is the differentiating factor between a green bond, social bond, sustainable bond, transition bond. We have come to what are the steps for issuance? How will it see the light of the day? How will the market be in a position to receive your issuance? Then we saw a little while ago as to what are the ways in which to reach out to the investor base, what are the steps to be, or what are the ingredients in the marketing material, in the investor pitching deck, etc. Now we have come to an interesting piece, which is the pricing. Like, how do we price a particular bond, right? Because if it were pertaining to, say, plain vanilla bond, or like how plain vanilla loans are, labeled, or the coupon rate is fixed, that is something which is now well established, right? But from a labeled bond perspective, how does the pricing methodology work? I've tried to address that also, such that the discussion on this topic, even though we are only, I won't say it is even knee deep into the subject, it is a very shallow or a broad overview as to this area, because you can have one day workshop for each of the instrument in itself, right? So I just thought that it will only complete the life cycle or the journey of these bonds if I mention a thing or two on the pricing methodology. So since 2016, there have been over 16 reports which have been published by one of the largest agencies which monitors all of this, which is the Climate Bonds Initiative. Analysis on how bonds have been performing in the primary market has been beautifully articulated in these reports. While I have not read all the 16 reports, I think I have read about 4 or 5 of the more recent ones, and the articulation is just brilliant, right? And then see the scope of coverage, right? Over 800 securities have been included in the analysis. The depth of the analysis is clearly brought out by the scope and coverage, right? And what is the methodology for pricing, which is largely adopted by issuers, right? The currency is largely in USD or Euro because investor base is largely in those markets who are able to understand and appreciate all of this. But having said that, we have seen in the earlier slides that countries have royally gone on the issue securities which are denominated in their own local currency. So largely it is in USD or in euros. What is the benchmark size, or what is the issue size on an average? It is greater than or equal to 500 million. This is what has been observed over the years to be an average ticket size or the benchmark size. Obviously, it has to be investment grade rated. And what is the tenor? The tenor is on an average, as you would have seen in the examples which I had given earlier also, be it HDFC Bank, be it Axis Bank, etc. The tenor is 3 years as regards the issue is concerned. And obviously, the respective framework, let's say for green bonds, there are frameworks. There are for sustainability bonds, there are reporting framework, there is pricing methodology framework. The respective framework have to be as applicable to that instrument has to be followed. So this is as regards pricing methodology and some observation from the market, right? Primary price means issue price. Afterwards, it is listed and it is traded in the market, right? So 66% of the initial allotment has happened to investors who have claimed that they have an ESG investment mandate. Okay, it can be a PE firm wherein some of the investors or some of their clients who have contributed or pooled in money have said that your deployment should be only in ESG areas, right? So globally, about 66% of the primary market subscribers have claimed that they have done so because they have an ESG mandate from the people from where they have pulled in money. So which is why I go 3 slides back, wherein when you reach out, when you have a plan to reach out to the investor base, it is also important to reach out to the non-ESG mandated investor base, right? Because as you can see, on an average, about 34% comes from that category of investors. So this is how it is received, or this kind of an analysis helps us to have a pointed target. Maybe the pitching disclosure, the pitching deck could be different for people who understand ESG and who come with an ESG investment mandate, be more granular. For those who are general investors and then who find this to be an attractive financial proposition to invest in, for them probably the pitching deck can be different, and wherein we don't use too many jargons such that you're able to appreciate what we're talking about. Then we see about sustainability, linked bonds. In the first half of 2023, that is when we talk about the first half as in the calendar year, it has achieved a higher book cover than even plain vanilla bonds, okay? And even when compared with green bonds. So this is a study which is available in IFC's website. So that only intrigued me that see the appetite. So this is not green bond. As we all appreciate by now, SLBs are not green bonds. They are not use of proceeds bonds, right? They are linked to a particular indicator. They are linked to a particular performance target. So this is something which is on the rise. I'm waiting for the figures of 2024 to be published by the entities concerned, such that we are able to even appreciate further the rising appetite for colored bonds and for sustainability linked bonds. Certain key considerations which would need to be kept in mind, that there are certain additional processes and costs involved. And that is why, right, it is not a plain vanilla bond issuance. It is not a plain vanilla loan kind of a documentation. So it comes with its own cost. It comes with its own layer of additional processes, which we should be mindful about. And those expenses can be upfront. Some expenses could be at the time of issuance. Some could be through the lifetime of the bond. For example, the reviewer, the external reviewer, right, on a certain periodicity, as is mentioned in the offer document, they're supposed to publish their reports. So you have to pay fees to them periodically for whatever is the tenure of their engagement. So there are certain additional processes, there are certain additional costs which are involved as regards green, social, sustainable or labeled bonds issuance are concerned. And largely these additional costs are to reassure to the investors. See, these costs are incurred. The examples which I gave are to only assure the investors that the money which you have signed up for or which you have invested in or through your subscription to these bonds are used for the area which the issuer had claimed to be used for. So, and to also disclose the impact of a particular project, right? So, all of the additional costs or processes are only centric to the investor to give him the confidence or her the confidence that my money is being utilized properly by the entity concerned or the issuer concerned. And the additional cost, if someone were to ask that, kitna zyada hoga, or how much percent of it will be higher, 1% more, 2% more. No, one cannot predict that, right? Because there are so many factors which add to it, like the size of the issue, the complexity of the project, like something is very, very technical, like say a particular process within steel manufacturing, right? Or, some other specific requirement as is prescribed in the framework which governs the instrument, or sometimes even geographic constraints can also add to the cost. There's so many factors which are involved in the additional costs which are to be borne by issuers as regards labeled bonds are concerned. And these cost considerations, if we were to bucketize or to break it up and see as to where and what kind of expense, so admin and compliance expense, this is something which is common, right? And this slide is not only about additional costs. That was only in the earlier slide. This slide is overall, just like any bond issuance, whatever is the expense to be incurred, that is there. And over and above that, the additional costs also I have tried to capture in this slide, right? Legal expense is there, which is common across labeled and unlabeled bonds. Marketing expenditure, yes, increased disclosure. Sometimes it is, as we had seen earlier, to a specific target investor base. So that kind of a marketing expenditure may have to be incurred. It will not be a generic investor deck or pitching or investor call. And they can always have a fragmented approach. Miscellaneous could be for education, training, because people need to understand as to what is the differentiating factor between plain vanilla bonds and labeled bonds, right? So that much of investment towards educating the investor community or the stakeholders at large, imparting training to them, etc., will also have its own set of costs. And the regulatory and compliance costs, definitely, which are there. And then the certification ones, for initially we had seen wherein after having assessed, after having engaged with these stakeholder, after having identified the project or the proceeds where to be deployed, you need to get a check done by an external reviewer, right? So the bond framework consistency, then periodic external assurance, then thereafter, ongoing reporting towards the tenure of the bond, etc., is to be done. So these are certain key cost considerations which I thought I will mention. What are the steps post issuance that we need to keep in mind, right? Once the money is in place, as I told earlier, you need to allocate the funds. The issuer needs to track the allocation. We say that, okay, this amount will be used for affordable housing. This amount will be used for WASH, which is water, sanitation, and hygiene. So you have to also track that, okay, once we have decided the allocation, which is as per the offer document, has it been actually allocated, right? And then there is a window also, like say 6 months, whatever is mentioned in the offer document of the issued bond concerned. Within that time, the allocation has to happen, right? And then after that has happened, you have to disclose the allocation, that these are the areas wherein I have allocated a deep dive into, or to double click as to within that particular area who has actually received the money. Such kind of disclosures have to be made. And then once that is done, it has to be audited such that the issuer or the investor community gets a confirmation or an assurance that whatever is being claimed to by the issuer is indeed what is the real scenario. And thereafter, as I mentioned earlier, periodic reporting. Right. And then what are the frameworks and guidelines? Just broadly, I have mentioned GRI, TCFD. This is the 8th of the series, wonderful series which has been, brought into vogue. So I'm sure you would have been very familiar through the previous 7 sessions about the various reporting and disclosure frameworks like GRI, TCFD, CDP, UNGI, UNCTAD, SASB, etc. And the reporting principles, the key and the most primary one is that of the ones prescribed by International Capital Market Association, right? What are the standards? What is the framework? Whether it is qualified to be called as a green bond or a social bond as such. At a very granular level, there are standards which have been issued by ICMA and of course IRIS Plus. So these are the various frameworks and guidelines. So this is the last slide. As I mentioned, 5:45 is when I have chosen to wrap up. I thank the Sustainability Report Standards Board of the ICAI for giving me an opportunity. As I have been mentioning all through, the websites of IFC, CBI, UN are rich with content. We just need to look at them, digest them, and try to put it in a manner like how I have presented to you. I was also fortunate to attend extensive training went on for multiple days on GSS plus bonds, which was conducted by IFC, Climate Bond Initiative Training Academy, and NSC. This was sometime last year. So I have tried to share whatever I had gained from my going through the websites and what I had learned through this wonderful workshop with all of you chartered accountants who are on call. So I thank you once again, and I pass on the mantle now to the organizers. If there are any questions that can be posed before me, otherwise I leave it to their discretion and you could invite the chairperson for her remarks on the subject. Thank you once again.
Yeah, thank you, Aditya, for taking us through the detailed and very detailed discussions on this bonds related, the requirements for the issue, the checklist, the documentation, the certification, and then audit, basically. So the actual purpose for which the bonds are utilized, the stakeholders are actually satisfied with the performance of the issuance of the bond and the collection of the money out of it. So really a great work. And as a sustainability reporting standard board is like organizing all taken this initiative, and about 10 of such webinars have already been conducted. And the entire year we are planning to have this webinar series to spread the awareness as well as building the capacity of the members by organizing this kind of webinars. We already started second batch in this year, the certificate course on BRSR, and we are also coming out with various other initiatives in the board. And my dear audience, I am seeing more than about 1,000 participants on and off are actually joining this webinars and getting the knowledge about the sessions. And today's topic also was very interesting. And we have already discussed with the RBI, IFSCA about the requirements and the checklist for the bonds. So all these things are already going with the regulators when we discuss about these initiatives. and new types of bonds are coming, like green bonds and everything. And that's why the new requirements and the checklist certifications are also coming. So friends, if you have any suggestions or anything on the topics of the webinars or anything relating to the Sustainability Reporting Standard Board, so please feel free to us to connect at any point of time. And office is also very proactive in taking all such initiatives regarding the sustainability. So thank to my office also. And we can take the questions. Here she is there moderating the session. So Yash, you might be getting some questions on the members who are in the chat box.
Yes.
So please, yeah. So Aditya is there to answer all those questions. So thank you very much once again, Aditya, being part of this webinar series.
Thank you,
Thank,
ma'am. It's
thank you,
always
ma'am.
overwhelming before Yash poses the questions. It is always overwhelming to see as to how, in a proactive manner, the entire team and ma'am under your leadership, capacity building. As I had also been mentioning through my presentation for the investor base, for the intermediary base, as also for professional base. It is important to have a very strong fundamental knowledge on each of this, because the issuer base or the investor base will be dependent on us, our knowledge base, to advise them appropriately. And several of these sessions have already happened, and you have also been advocating the prospective rules to come with the and engaging with the regulators. So I would also thank you, ma'am, for championing this. And I would now request Yash to pose those questions before me, which you would have received in the chat window. Thank you.
Thank you, ma'am. We have a question. One of the question is, to what extent is the growth in sustainable finance driven by investor demand vis-a-vis regulatory or policy demands?
Great. So in this case, what has happened is the investor demand has come first than the regulatory demands, right? As ma'am also mentioned, that several of the taxonomy, the framework requirements are still in the draft stage, right? Concept papers are brought in. If I were to draw an analogy, like say housing finance, which is the regulator for housing finance? It is the National Housing Bank, right? Which is under the Reserve Bank of India. The National Housing Bank was established only in 1980, but housing finance came into existence sometime in 1978. And the pioneers in housing finance were the ones who went to the Government of India, Ministry of Finance, Department of Financial Services to say, hey, we need a regulator in place to regulate us. So imagine a market participant going to the government to say, I want someone to breathe down my neck. I want somebody to regulate me. Right. So there have been various instances in the past as well, wherein the market dynamics give shape to certain needs and requirements. In this case, sustainable finance is already in vogue, but the regulatory prescription regarding the same is still under works. Some have been notified and published, but many of the granular aspects are yet to be notified. So to answer the question, yes, the regulatory framework is underway, but the investor demand or the issuer demand is already in place, and certain amount of maturity has already taken place. Next question, please.
So do we have any guidelines from the SEBI or the RBI regarding this, as subscription to these bonds is not assured?
Subscription, no. See, this is backed by government, in IFRC's case, and these are secure. Like these bonds, it is not that it is unsecure. And what is important is especially ones which pertain to SLP, right? Step up and step down, which is concerned. So investors who are investing in SLBs, they have to be mindful that there could be scenarios wherein the coupon rate is reduced if the company which has raised funds through them is doing exceedingly well. So I feel that from a security perspective, I don't think there has been enough concern. I think the concern is more around understanding what it is all about, because there is an enigma around all of this, right? What exactly it is, and because of that enigma, not many people come to subscribe to it. So I think there is no doubt, and credit rating, or rating is one of the things which was mentioned in the slides, wherein they have to be rated by the rating agencies. It has to be forming part of the public disclosure, advertisements, etc. So it is not something which the investor base should be worried about.
But Aditya, there are some 5 pointers guidelines or policy which is issued by RBI also, what I recollect.
Yes, correct. So there are certain points which have been but they are very broad. They are not in the kind
Very
of
broad,
the
yeah. That
that's
how
it.
the investment should be, where the investment should be made, and
Yes.
all that.
Correct.
That
And that is a
policy is
sub-
there by issued by RBI.
Correct. And that is largely a subset, ma'am, of the IFC's, rule book on investment, the negative areas wherein investment should not be done. And there is also a concept paper which has not been published. In fact, it's been quite a while. I think it came in February, March last year on, climate-related risks in finance. It has not been notified by
Actually,
RBI.
we were a part of this is issued by IFSC, and we were part of that from SRSB also. And
Okay.
there are a lot. So this is draft paper which had come, and we had interacted with RBI also, because RBI also wanted to respond to that. But then actually nothing has happened. At that time, Injeti Srinivas, I think, was there heading IFSCA.
So that is why it's still in the draft or concept form. It has not been notified.
Yeah.
Right? So,
But then after that, this RBI has brought this policy, some small policy which has come from RBI.
Correct. So the nuts and bolts are to come, and which is what I think, ma'am, you also mentioned, to be networking and making the right advocacy to the regulators. That is true. The time, in the coming few days, we expect the regulator to bring about the granularity as far as this is concerned. Thank you, ma'am. Yes,
In fact,
Yash.
very few bank or the financial institutions have issued this. I think 5 or 6 banks have
few of
only
them.
issued this.
Very true,
Right?
ma'am.
5 or 6
Two of
banks.
them,
Yeah.
correct. Two of them were there in my example, which is HDFC and Axis. And then globally also we are seeing
Yes Bank.
Yes Bank has issued. Globally also now we are seeing the banks. Bank of China was also in one of my example. Banks are now increasingly lapping up to the labeled bond space.
Correct. Yes.
Thank you, ma'am. Yash, any further questions?
So coming to the next question, do we see any evolution of taxonomies shaping the sustainable finance landscape in the upcoming years? Since this is an evolving domain, do we see any taxonomies which will?
Correct. Definitely it will come in place, and many of it, as ma'am also is mentioning, is under works. I had briefly mentioned about interesting developments happening in Latin America, right? Panama is one of the countries which has notified the taxonomy pertaining to the labeled bond space. Climate Bonds Initiative, IFC, a lot of advisory or guidance has been issued. However, if you ask me concretely, is anything published as yet? No. If the question is in the coming days it is to come, yes, definitely, going by the global trends.
Sir, coming to the last question,
Okay.
do we see any instrument? Do these instruments present any risks or any opportunities that CA should account for?
Yes, as ma'am and I were discussing in between, a lot of opportunities are there because we need specialists, we need domain experts in this area, and we need people who can advise or answer to the queries posed before by both the issuer community as also the investor community. In absence of concrete regulation, this kind of an understanding, which is based on globally available parameters or regulations or standards, is what we as professionals, as CAs, need to possess with us, which can only happen through sessions like this or through voluntary reading. Because as I mentioned in my gratitude slide, enough and more content is available on the websites of UN, IFC, CBI, etc. It is only upon us as to how much disciplined are we to go through these websites, to go through the literature which is there on these websites, and able to say understand them bit by bit. If there are any questions, probably in the subsequent seminars or in such engagements of like-minded professionals, we are able to clarify those doubts which could emerge during our self-reading. But self-reading is extremely important. As you can see, there is no particular textbook from which I would have made this presentation, right? It has been made out of research spanning across all these websites and tomes of publications which have been made and which are available on these global websites. So it is definitely an open space, a lot of opportunities which will come our way, as ma'am was also mentioning. The acceptance of the labeled bond space is only on the rise. When that is on the rise, the kind of expertise that they will demand out of our profession, our community, is also definitely going to increase. So let the curiosity bug bite you, and all of you should, on a self basis, delve into all of what is generally available on the public space to educate oneself, at least with the fundamentals.
Thank you, sir.
Thank you.
Yeah. So I'll come to the vote of thanks. We don't have any further questions presently. On behalf of the entire team, I extend a warm thank to all the participants for joining us today for the webinar on a briefing overview on sustainable finance instruments. Your active engagement and thoughtful questions have truly enriched today's session. A special expression of gratitude to our distinguished speaker, Mr. R. Aditya Subramaniam, for sharing profound insights into sustainable finance instruments. Sir, your expertise has illuminated the critical role of these tools in promoting environmental and financial sustainability. Also, we have these upcoming webinars scheduled every Thursday from 4 p.m. to 6 p.m., which will delve deeper into various emerging themes in sustainability. Once again, I thank you all for your active participation, and we look forward to your continued engagement in future endeavors. Wishing you all a productive day ahead. Thank you all. Thank you, ma'am. Thank you, sir.
Thank you, Aditya,
Thank you, ma'am.
for
Thank you,
wonderful
everybody,
session.
for this
Yeah.
opportunity.
Thank you, everyone.
Thank you.
Thank you, everyone. Yeah, bye.
Tag support, go offline.